In this video, I want to discuss an opportunity with DraftKings. I've essentially opened up a position in the last day or two here. I own some shares, 1,500 shares. And I also own some $32 calls expiring next month. The typical monthly expiration there, third week of it. Let's look at the chart here and I'll explain my thesis as to why I think now is a good time to go long here. So a couple of days ago, last Thursday as a matter of fact, actually let's zoom out for a second and look at the context here. So DraftKings for the past year, traded a little higher, back lower to this $30 range, back higher, and it's essentially bled ever since mid-August. Going into earnings here, we can actually see that it began to break down further. These were the days leading up to the earnings here. We kind of broke past the previous lows that we've had for the 52-week lows, even more so. I have to go back all the way. What is this? 2023 to see lower levels here. But we began to break down. And then we had earnings, as you guys just saw there a second ago. On this particular day, on Thursday, earnings come out. We can see here the knee-jerk reaction was for the stock to go lower. We had earnings at the earnings call the very next morning. But by the time the cash session opens up, which you could see here by the dark background, the gray background represents the overnight session, so from 4 p.m. to 9:30 a.m. the next day, we can see that all of a sudden the stock began to trade higher and very, very aggressively. I mean, at some point, we were down as much as 13% right away in the first 20 minutes after earnings. And leading up to the cash session of the next day, we were still down about 9%. This is a fairly significant gap down. But the moment cash session opened up, we can see here that the stock traded higher and traded sideways. And we can see here that, 2 days of trading sideways, and now we continue to make new highs on the day. Even though the indices, as you can see here, are currently actually slightly red to flat on the day. So I like to refer to this as an earnings failure. And to just make it simple here, if we look at that day and how the headlines came in here, for starters, we could see a lot of downgrades coming off that day, right? So we could see lowers target. These analysts lowering targets here. Again, a lot of analysts lowering targets. It makes sense why, because if we back up a little bit here, we can see that they had to cut forward estimates for their future earnings, and they also missed current quarter earnings. You'll find that somewhere here as well. Either way, just a miss across the board. Absolutely nothing bullish about anything from the earnings report, which is why we saw the price go lower. Now, the expected move, obviously, following such an earnings report and cutting future guidance, you'd expect lower prices, right? That would make sense. That's the rational path for the stock, but that's not what happened. As we can see, instead, the stock ends up gapping down, and then we trade higher, and we've continued to trade higher since that day. I refer to this as an earnings failure because we've essentially undone the previous close on the back of earnings that are opposite of what's expected. So this is our previous day close. Look at this over here, right? So we closed here at 27.92. The moment we begin closing above this, above that low, let's say, I consider that to be an earnings failure and for it to be a long play. Because you can run the thesis here that we've run out of sellers. That if there were still sellers left at that point in time, they would have driven the stock lower and lower. But even on the back of very poor earnings, the stock managed to still reverse this movement and trade back higher. I would use this as my pivot here, just basically $28 as my pivot, which is when I started building out the position as we began to cross back over that $30 mark. I mean, it even looks, if you're someone that obviously trades the technicals here and just you draw a line across the previous lows here, just in general trading, possibly a false breakout here works well, but doing it on the back of the fact that we had bad earnings. I mean, the stock had every reason to, first of all, it already began breaking down. So these earnings gave the stock every reason possible to continue going lower, but it did the exact opposite. It ended up going higher on the back of poor earnings. And as we re-enter this range here, and as we have a lot of shorts stuck here, I mean, just think about all the shorts that piled in as we began to break below, as the earnings came out. A lot of shorts piled in, a lot of longs were thrown out of the stock too, right? You could imagine all the stops that were put at this $30 mark that essentially got shaken out. And now we're coming right back in. All these shorts can be covering. Obviously, you're going to have people, buyers chasing it as we re-enter the range. And all this is happening on the back of very poor earnings, which is my thesis as to why I opened up the position that I did open up. So you guys can see again the shares. And this is Interactive Brokers, by the way, where I have my positions on. And I have some calls here. Again, so about a month out, I am expecting obviously a swift move up, usually in these sort of earnings failures that occur when the stock is pivoting. Now, what I mean by when a stock is pivoting, well, when it's kind of beginning to reverse the move. So let's say a stock was, trending higher, and all of a sudden positive earnings came out, knee-jerk reaction was move higher, but then it reversed and began to trade lower. If we were to short that, we would also expect a very quick and violent move to the downside. In this case, as we're trying to catch the bottom here, expected to trade higher. Earlier this quarter, I think just a week or two ago, I had a very good trade in UNH, which worked in a very similar fashion. I posted it on my blog, which I will link if you care for in the description as an example. But so what happened here is, just to give you an example of it happening on the opposite side, is if we back up a little bit, just give me a second here to get this for you guys. So earnings come out, right? Where is it? Earnings come out pre-market, stock trades higher, continues to trade higher. The moment cash session opens up, we come lower, tested a little higher, and we begin trading lower. And this was on back of of positive earnings. I mean, there was upgrades for the stock. You could go and look yourself, but we had that rejection. And then look how quickly we moved lower, and we captured essentially, I would say from like 368 all the way down to about 330 I had puts on, and I captured this whole movement very, very quickly. It was like a 10% drop in the stock, as you could see here. And the markets were not dropping this quickly, by the way. I mean, it wasn't like every single day was red for the market. But we had this reversal. You can see we kind of came down here, and now we're beginning to kind of bottom and maybe create some support of the previous resistance. But whatever it might be, this might be the range moving forward for United Health. But the point being is that we topped off the back of positive earnings, and we can verify that with the knee-jerk reaction being higher. Now, the reason why I say the knee-jerk reaction matters is because sometimes the headlines may make it seem as though the earnings are positive, but you will find sometimes is that you might be missing some details there. Because if, let's say, those earnings were all negative, but we saw DraftKings actually trade higher almost right away, then we must be missing something. Because who trades at the very, very beginning of a news release? Obviously, it's algos. So they're obviously, as far as phrasing all that data, and they must have some sort of expectations. And if those numbers don't meet their expectations, they will buy or sell and so forth. So if you're looking at the headlines and it seems negative to you, but the stock's instant reaction is higher, well, you might be missing on something, and I would not consider that to be an earnings failure. I want to see all the algos first to trade the stock down into the rational, towards the rational direction. That helps you verify that, okay, the earnings were bad. And then once people come in, once money managers come in, once people cover their position, then we can see whether or not the stock is going to fail. Because if the very next day money managers came in and began dumping DraftKings lower, you simply do not get into the stock, right? But that's not what happened. Again, this shows us that, hey, whoever dumped DraftKings by then and there might be done dumping it. That's it, that we might see upside from here. It's worth noting that there's no guarantee of how much upside you could see. It could go up to $34 and fizzle out. It can go all the way up to $40. That's something that you yourself have to manage. You could try to see how it does relative to the market over the coming days. As I said, today it's looking pretty strong. It's up 4% on the back of the fact, again, the indices are not doing too much. I mean, Dow is up quite a bit, but other than that, nothing else is really up that much higher. If you were to get into this trade right now, how would you manage the risk? As I said before, I would use this pivot right here. From the earnings close. Now, that might be a little too far away for some people to be comfortable with, right? It's about, it's a 10% away. If we just look at this, I would say just a close below $30, in my opinion, would be enough to kick me back out of that, because that's just showing weakness way too early. If this gives us a reason to go long, and if this is a failure, I don't expect us to trade below $30 that quickly. Can this trade back to 30 and bounce and keep going? Of course, but if it starts to challenge and close under 30, that's just not enough strength for us to work with. But that's this trading idea that I wanted to share with you guys. If you enjoyed this content, let me know. I could try to cover other earnings plays in the future. You know, like there's another trade I have on right now, for example, is IBM. That's been working very well for me. This is an example of going in the same direction though, but it also works well in a bull market because look at this. So IBM reported earnings here, right? It gaps lower, trades higher, breaks out to all-time highs. Look at this, on the back of bad earnings. On the back of bad earnings. I mean, look, let's back this up just to show you guys this. Look at this. Trades lower, opens up, cash session, look at this, boom. And then comes back and backfills the previous resistance. And then trades higher. I mean, this looks great. The chart looks great. If we could just show you my IBM position here. Yeah, so this is my IBM position, 3301. I have kind of traded in and out a little bit on it, taken some profits, added some, increased my position again as the stock was trading in this region. This is another example of just an earnings failure that's been working very well so far, and I'm still in this trade. I actually expect this trade to continue to work for me over the next month or two, but we'll see. But if you enjoy this content, throw me a like, comment if you have any questions for me. Other than that, thank you guys for watching.